The aggressive folks worked here in a performance below market expectations. We've recorded so many videos here about stocks that have exceeded market expectations that it makes us believe, or rather even get confused when we talk about it. This is one of the few companies that came in below market expectations. The market expected earnings per share of $3.67. The earnings per share came in at $3.58. Basically, when we look at the financial part here, we need to understand whether the market's expectations were too high or if the numbers did not meet expectations. Right off the bat, we can see that the market's expectations were absurdly high because we have a year-over-year growth of 26%, working with a revenue of almost 20 billion, and this 20 billion revenue is historic for the company. The company is at its highest revenue and is experiencing its greatest growth year after year. So this is a very interesting point to discuss, as we see that the market sometimes demands too much from companies that are performing well, which creates turbulence in the stock price. This is an interesting topic to address in this video. Basically, we have earnings per share of 2.3 billion, working above 1.5 for a quarter and 1.1 from a previous year, and the earnings per share here of 3.9 billion, above 2.48 and above 189. Sensational financial beauty. The market wanted a lot, right? But Show de Bola is a company that is not very concerned with dividends, but rather with value growth, working here with only 10 cents in dividends per share. Since we are dealing with a stock price at $243, 10 cents of dividend is basically nothing, right? And how did it perform? When we look at the trend, when this trend was reversed, which was in September 2023, the stock rose nothing more, nothing less than 80% in a straight line. An excellent one, right? An excellent move. And now working on this correction. Remember, everything that goes up corrects. Everything that goes up corrects. Everything that goes up corrects. This is how it stands at the moment. Do we have an upward trend? Without a doubt. Very beautiful, very linear. It's a stock that doesn't know what a drop is, right? And at this moment, it is working on this correction. Can it still drop? Yes, it can still drop here by about 4 to 5%, which would be around $9 to $10. Is it worth entering now? From my operational perspective, it would be worth breaking through 260, as there would be room for another rise. But if you want to take advantage of the breakout, buying the company would be interesting around $235 to $236, which is when it may test the 21 average. Okay, but that's it. A stock in a very powerful upward trend with a more significant correction at the moment. Okay, folks, when we analyze the company's performance from July to August, what do we have? We have here from July to September, right, which is the quarter, and we have here a 20% appreciation, which is a lot of appreciation, right? What a powerful company. Folks, this is PGR, an excellent company in the financial sector, making its producers very proud.